Here's what most therapists aren't told about taxes in a business. When you're an employee, these things are pretty smooth and easy. If you worked in a private practice, or maybe you got a W 2, or you worked at an agency, something like that, money is withheld from your paycheck. And just the general system does a lot of those things for you. Because guess what? Here's how that goes. You have your salary, right? Have your salary. They take taxes out of that check every single 2 weeks, right? You get to spend what's left. Here's the flip side, which is good and bad. In a private practice, in a business, you make all the money, you have all the revenue. There's nobody taking taxes out as you go, but you get to spend in the middle and then you pay taxes on what's left. So, what's left, you have to make sure you're taking taxes out of that yourself. But a smart tax planning CPA strategist would tell you we need to strategically spend within that middle so that what's left, there's not much for them to tax what's left. That is the trick, that is the key, and that is what we can do for you. Now, this client that I'm talking about, she had none of that. She kept her business expenses low purposely, which is good to a degree, but guess what? When that happens, Uncle Sam's comes wanting their money. And you aren't set up to automatically save for taxes in a business. So because all of the money that comes in looks like it's available, it's there in your bank account, but if you're not setting that money aside, it's already spoken for between federal taxes, state taxes, self-employment taxes, all the taxes. And so we want to make sure that you're in a good spot. So unless you have a system in place, then that tax portion gets quietly spent throughout the year. And then when it comes to tax time, if you're not proactively planning, you get a nasty surprise like this.